But the fact that that's all happening shows you that crypto is never going away. And I think the more it gets regulated, the more institutional assets flow into this asset class. I think the reason we own so much Bitcoin and Ethereum right now and 32 other positions is I believe this sector will be the 12th sector of the S&P, as you pointed out earlier. And I believe that you want diversification. When I own a sector like energy in the S&P, I have no position more than 5%. Well, I have 32 positions on. And my view is simply that Bitcoin is not a coin, it's software. Ethereum's software, Polygon software, Solana is software. All of this stuff is software. So I'm just investing in software development that has the potential to provide productivity, and the market will value it based on its scarcity in the case of Bitcoin, or the proposal of economic increase, like a Polygon reducing fees and friction, and HBAR being used by Boeing for supply chain management. All of these different scenarios. I don't know which one's going to work, but I don't need them all to work. I just need a few to work, and I'm going to make a ton of money. That's the way I look at it.
Shark Tank star Kevin O'Leary, also known as Mr. Wonderful, like so many other investors, has come a long way from a few years ago being strongly positioned against Bitcoin and cryptocurrency to now being one of its biggest bulls and it making up a substantial position in his portfolio. In his most recent interview, O'Leary explains why he is now so bullish on cryptocurrency that he has over 32 various positions in the sector, and explains 4 major developments that are happening right now that will inevitably push prices up. Make sure to stick around to the end of the video where I will cover the latest on-chain Ethereum data to see if it backs up O'Leary's bullish stance. Also, only a small percentage of my viewers are actually subscribed. If you enjoy finance content, consider subscribing or liking the video. It's free and you can always change your mind.
Now, as far as crypto goes, and Roy and I are obviously focused on that, I don't think that matters as much as this, what I call 4 vectors of policy coming at crypto right now. Let me walk just through the shopping list. So this is also unprecedented. Number 1, you got the Loomis bill, and it's mostly positive. I've read it. A lot of positive policy in that. Number 2, you've got the executive order from Biden that says we must embrace this and regulate it. Also good news. It could have gone the other way. He could have said we want to make this illegal. Number 3, you've got the SEC talking about carbon audits, and I'll get to that in a moment. That just happened last week. And number 4, you've got this remarkable situation coming out of BlackRock, the world's largest money manager, decrying and talking about Bitcoin mining and carbon credits not aligning. And I think there's a lot of policy in all of that. But the fact that that's all happening shows you that crypto is never going away. And I think the more it gets regulated, the more institutional assets flow into this asset class. The trend is your friend as far as Bitcoin's concerned. I think what affects price near term and midterm more than anything else is to get policy out of the US regulator on Bitcoin and stablecoins. The two that, if you read the Loomis bill, are really focus on Ethereum, Bitcoin, and stablecoins. And so that's interesting, because the fact is, today, and I work in the indexing market where we try and index for institutions. I'll give you an example. If you're a sovereign wealth fund in the Middle East and you want exposure, some of these countries generate $250 million of cash a day, and they want obviously to get diversification. They already have oil, so they want the S&P 500 X energy. And 2 years ago, they started saying, well, we're not allowed to own Bitcoin, but how do we get exposure to Bitcoin volatility? And at that time, the way that was really working was many companies had raised capital in the US markets that were Bitcoin miners, pure miners. They were awarded coins, they kept them on their balance sheet. And the theory was that if you owned the equities, you could get exposure in a legitimate way to the volatility. And indeed, if you look at the price of Bitcoin vis-a-vis, let's call an index of some of the popular ones, that would be Hut 8, Marathon, Riot, and Hive, which were very popular to be indexed. They really traded in tandem with Bitcoin. So it worked for a while. But that's why I talked about the 4 vectors. That correlation is going to fall off pretty quickly now that we have, for the first time, calls for carbon audits. Because most of the public companies in the US that have been used for proxies have been saying, okay, we'll just buy some carbon offsets. And that worked fine. But now that the SEC wants to audit this, you can't find an auditor that's willing to sign off on that ledger, because you can't say I'm using, dirty energy to mine coin, and I bought, an acre of the Amazon forest, and try and and pass them off. It doesn't work. There's no way to audit carbon credits. So we are in a bit of let's call it a bit of a pickle right now. And I'll be frank and transparent on this. I have dumped all those stocks as soon as I read the executive order out of Biden. I sold.
Which stocks are those? The mining
specifically,
stocks?
Yeah, specifically we owned Hut 8. We were indexing some of our my mandate. I can't own Bitcoin. I mean, I can own it personally, but if it's in an operating company, I can't do it because we don't have a regulation, a rule on that yet. And that's why most of it is actually held by high net worth and hedge funds like Roy's, where they don't have that compliance issue. I do have a compliance issue. So we indexed and it was working just great. Marathon, fantastic trading vehicle against the price of Bitcoin. Riot, Hut 8, and Hive. And so they're good liquid stocks. They're easy to get in and out of, but I don't own a single share. Dump them all. I mean, they're going to be forced. They're going to run into carbon audits, and their expenses are going to go up. And we can talk about where capital is flowing, but it certainly isn't in that model anymore. I think the reason we own so much Bitcoin and Ethereum right now and 32 other positions is I believe this sector will be the 12th sector of the S&P, as you pointed out earlier. And I believe that you want diversification. When I own a sector like energy in the S&P, I have no position more than 5%. Well, I have 32 positions on. And my view is simply that Bitcoin is not a coin, it's software. Ethereum's software, Polygon software, Solana is software. All of this stuff is software. So I'm just investing in software development that has the potential to provide productivity. And the market will value it based on its scarcity in the case of Bitcoin, or the proposal of economic increase, like a Polygon, reducing fees and friction, and HBAR being used by Boeing for supply chain management. All of these different scenarios. I don't know which one's going to work, but I don't need them all to work. I just need a few to work, and I'm going to make a ton of money. That's the way I look at it. I see it as the number one destination for institutions that are allowed to index it when they can index it. They would be picking up 1% to 3% weighting if they could. They tried to do it, as I mentioned earlier, using equities that mine Bitcoin. And that's in a bit of turmoil because of ESG mandates. But Bitcoin itself will provide enough liquidity for an institution. And I would add this, regardless of what you think your target price is, if it does become an indexed asset, and I think once the SEC mandates it, it will, the volatility will decline dramatically, because what happens in an indexing model is when prices decline and your weighting is 1.5 basis points or 150 bips, you simply buy up to your 150 bip maximum. And when prices exceed that, then you trim back. But that provides tremendous stability for any asset. So you find that stocks that get indexed, or assets that get indexed, all of a sudden prices go up and stability becomes part of what their story is for a very long period of time. Now, I'll add that the Canadian regulators, specifically the OSC, in the last 2 years has been extremely enlightened. And what I believe, and this is a personal opinion, and I've said this before, but I believe that all the regulators talk to each other practically every day. But there's a special relationship between the OSC and the SEC, because they regulate markets that are so similar in nature. And so I believe that whatever is going on in Ontario has already been quasi-approved by the brethren at the SEC, and they're using Ontario and the Canadian provinces as guinea pig states to try these ideas out. And what ideas are those? The first ETF with the underlying asset real Bitcoin, the first ETF with the underlying asset Ethereum, the very first global crypto exchange attached to a dealer broker license, both sides regulated. That was extraordinary. That was called BitBuy. I know that one because just a few hours ago, WonderFi acquired 100% of it. So now WonderFi, which has decentralized finance, has combined with centralized wallets. That's never been done before. In addition to that, the OSC has made the order by which that was licensed public. Many other jurisdictions are reading the 300+ page document and using it as a blueprint for other jurisdictions like the United Arab Emirates and Brazil and Switzerland and England. So those regulators are marching ahead, making the assumption that there will be SEC policy. So if you're an investor now, like I am, and clearly Roy is, we take our positions pre the stabilization of indexing by institutions. Why? We'll be rewarded for taking that position now. And when it happens, I don't know. Could be 6 months, 12 months, 18 months, 24 months, who knows? But when it happens, prices are going nowhere but up.
So there's Kevin O'Leary with the 4 main verticals that are playing out for the crypto sector and why he believes prices are inevitably heading in one direction. But does the on-chain data back him up? Well, checking out some data we have been following for a long time on the channel, we have the Ethereum supply held on all exchanges. Whilst we have been in a strong downtrend with Ethereum being pulled off of exchanges for a long time now, we are now seeing an uptick in supply flowing back onto exchanges, which is not what we want to see and implies bearish price action. Perhaps with the price bouncing back up, some investors are using the opportunity to cash out. However, at the moment it isn't too alarming, it's just something to keep an eye on. This, however, isn't reflected in the Bitcoin supply dynamics, which, as we can see, the Bitcoin supply shock ratio has never been higher in the last 2 years. Hopefully we can see Ethereum play out the same over the next few weeks. Anyway guys, hope you enjoyed today's video and that provided you with some value. I'll see you all in the next one, and as always, have a great day.